Hey traders, what's going on? Jamie Setley here. It is November 14th, 2019. This is the Midweek Strategy webinar. So let me know before I start that you guys can hear me and that you can see the screen. Little confirmation that you can hear me, please. Test, test, test. We're good to go. All right, thanks, Michael. All right, so I'm going to start here with first chart we're going to look at is dollar Swedish krona. And back on, I think we'd looked at this back around here somewhere. And the implication, we had 5 waves down. We were looking for a recovery. And then, we would kind of said, or I think the exact words are, once clarity kind of reemerges here, we'll take a look at it. Well, we got clarity today. Dollar SEK is traced out what I think is a flat, okay? And it's extremely clear. You've got a 3 waves up, right? Little 5 waves in wave C here. So good to go on the pattern front. Also, resistance came in at a slope confluence, the sold parallel here. You've got 50% retrace. If you look out to September, you've got a possible head and shoulders top, which is, this is a downward sloping neckline as well. So that is extremely bear, portends an extremely bearish situation if we do complete the pattern, right? So it's early to say so, but there's a lot here to like from the short side. And then I don't want to forget, say why people like, why do you look at, dollar SEK kind of like as a bellwether or whatever. So this is a really long-term chart of dollar SEK. We've talked about the non-confirmations, right? Remember the non-confirmation with DXY? We looked at this a while ago, but this is really important. So if I throw up kind of DXY with the chart, remember back here, hold on, let me put up a different DXY chart that has more dates on it. Here you go. All right, so back here, you had this non-confirmation, right, where DXY was making slightly higher lows, right, and dollar SEK was on the lows, all right? That preceded a gigantic bull run in the dollar generally, right? So we have the exact opposite situation right now. We have dollar SEK actually making new highs, right, for the move through the 2016 high, and DXY is not. It's the exact opposite situation that we had way back here in the 70s and early 80s. So I love this setup from a long-term perspective. Of course, if we just plot, say, plot this with, we're going to do dollar euro so that they align, right? I mean, it's the same trade, right? So you're looking at the same thing here. So I just like to see this clean evidence for dollar SEK. Gives me a good indication that, the dollar short idea is actually on the right path. And if we take a look at, not to forget, right, we did have this monthly reversal in dollar SEK last month. It's easy to forget because we're mid-month here and we forget these things. Remember, euro had the same thing, right? We talked about this, maybe not necessarily working right away, and it certainly hasn't because we've been kind of drifting lower all month. But we have the setup now on a near-term basis, not just with dollar SEK, but also with euro. And here's the euro chart that you'll have today in the update. So if we draw a channel just back to the September 2018 high, right? Center line here, perfect resistance on 913 and resistance again on 1011 before you got the bigger breakout to the upside. I like the fact that obviously today's low is just a couple ticks under the 618. It's also took out this 1015 low, and then we turned up, so maybe a little stop run there. We had decent volume today for the first time in a while. on the upside. So that's on futures, of course. So I like just taking a stand against today's low. There you go, right? So risk is tight. Got orders in. It'll be in the update, but it's 110.10 to buy. Stop 109.85. First target, just looking at 110.60. I mean, I'm bullish, bigger picture bullish, but you got to take some off when we get a chance. So be able to trade multiple pieces of this, and yeah, that's that. So euro, new long setup, right? We had one before, we ended up trailing out over here, and now we're back in the game. So cable, certainly possible with British pound that you've got this pullback here, and we should get new highs on the move, right? However, I'm just targeting on this piece where we went long yesterday at 45. I'm just targeting the trend line here. I mean, it's not like the market, it's not like there's any volatility right now. So, I'm just targeting this. If we come back and, maybe we can get long again. But, if we break to the upside through this, then we'll reassess, right? If you get a break after the upside, come back and test the support. That would be a possibility too. But for now, just looking towards that 29.30 area on the British pound. Dollar yen, very interesting here in that we did stall out, weakness that is, kind of, found some support where we thought we would. Remember, we're looking at a shift fork from all the way back here, and noted yesterday that you had kind of these 75 and 25 lines acting as barriers, and certainly that's happened. My thing with this, though, is that I do want to give it a little more room to work on the downside, because the drop, right, through this wedge barrier, right, we don't know if this is going to be a fake out or not, of course, right? And the bearish implications are much grander than just this drop here. So might as well give it a little more room, run up we've got the stop tightened a bit to 108.80. 107.65 here is going to be resistance, or a level to watch for resistance if you get up to that level. And also, we've got a possible bearish fork to follow on a shorter term basis, right? Median line, more or less support today, missed it by like a pip or something. And you can see that the new kind of bearish 25 line here, right, does go along some pivots. It's also the underside of the wedge line. So 108.65, big spot for resistance if you get up to that level. And if you go through it, something else is probably happening, and we might actually end up long. But for now, I'm fine with the short side up here. Aussie, I guess, got clobbered on the jobs data and then continued to weaken with Chinese data. We are now at the lower parallel, and today's low is actually 618 retraced to the tick of the run-up from October 2nd, okay? Like the long idea here, in order for me to actually make a purchase and want to risk money doing it, I want to see us back up through 68.09, which is this old low and form a resistance. It is promising that we had a 4-hour volume reversal today, okay? This is Aussie futures. We had the same setup on the low back in October, okay? You're going to get false signals with this, of course, okay? But you've had some pretty good ones. So like, you've had some good ones over here, some tops in January. In fact, the January high, the December 2018 high. Again, plenty of false signals, but you can see plenty of decent signals too. Even during the entire drop, you kind of identified some pretty good minor lows here back in 2018. So it's not the signal by itself either. You've got the fib level there, the lower parallel from the pitchfork there, and the volume reversal. You want to combine all those things, right? It makes the setup much stronger than if you are just looking at one thing only. So do like the idea of Aussie on the long side. We'll watch that, see if we can get up over 68.09. And if we do, we might have, if we do, we will have a trade to be made. right? But that's what I'm watching for there. Okay. Kiwi pulled back some today, but actually just towards the end of the day, just now, I think you had manufacturing data come out, and it's turned up. I was kind of surprised we didn't hold, and this is such a well-defined level, and the market, so strong in RBNZ. I was kind of surprised you didn't hold that 63.90, but that's why we wait. And you did have, I believe, a 618 retrace too, right here, right? So that worked out. We're break even here, after, if we take out the 618, I don't really want to be involved. A lot of options here. I obviously am leaning to the long side, but based on a couple things, one being the pitchfork, it's really, it's a wonder to behold here. And two, momentum profile on this. So where's Kiwi? All right, here it is. So ever since essentially over here, you've had a bullish momentum profile, right? You've got RSI above 70 on the highs and holding 40 on the lows. I like that, right? So that's, hold on for this and see if we can get up through resistance from the month open and 64 and change and all that until further notice. Now, the other option or alternate option, we have 5 waves up. If this is just A and this is B, then you're looking at a much deeper drop before we can go higher, and we'll deal with that if we need to. Just looking out ahead, 2 legs down would be 62.75. That's a pretty deep drop. To get for Kiwi, you would obviously have no such pitchfork at that point, but it is in line with other lows like way back here, right? So that would be the September low, and that would be a pretty, symmetrical kind of head and shoulders bottoming pattern if indeed we went that low, right? So literally just trading on the levels. I mean, took out the high here from September, right? Ding, ding, ding. So if we do start to weaken a bit, that's something to consider, 62.75. I do lean towards the long side. That doesn't mean much, but the trade's protected at this point with the break-even stop. Going to the Canadian dollar, I am looking for a CAD low, a dollar CAD high over the next couple of days. Again, we've got 200-day average just above, and you've got this parallel. We've been trading essentially between 25 line and 75 line now for a while, since September. So that's going to be, call it 33.15 or so. Remember, I moved it up to daily reversal resistance, which is just this high, that day, that high, that close. That's 133.39. Okay, would rather not see, I guess, that high, but I don't really care. I'm just looking for evidence of a reversal in between essentially the 200-day average and 33.39. Okay, I believe Polo speaks tonight, so there may be some action in dollar CAD during Asia session, which is rare, but to look for here. On the flip side, if we pull back sharply, you've actually got the center line at 31.70 as potential support. It's also this low down here from 10.11. Let's take a look at DXY. All right. You see the resistance over here from April and May, right? Kind of turned into support on the last leg up. Breakdown level, came back to it and rolled over. That's a good sign in my opinion. So again, looking for DXY to continue lower. Dollar SEC's cleaner, but whatever, same idea. All right, now let's get into some of the indices. The Qs are the most interesting to me because remember this weekly chart. I posted this maybe last week, I'm not sure, but the original channel from the 2002, 2008 lows, right? That channel extended up, right? So half channel extension, full channel extension, okay? Half channel extension, now we're on daily, was resistance, right? Back in 2015, right? Then we traded around it in 2016 before we finally took off. This is a really important kind of, point in time where we are. So we're back to it right now. It has acted as resistance so far. Obviously remains to be seen if that continues, but the market's in a super tight range up here. You have had, if I look at how tight the range actually has been, so we're looking at futures here in a, what is it, a 5-day? A 5-day closing range of less than 0.31%. That's crazy, okay? We just had that. Now, throughout 2017, that really didn't seem to matter too much. But before that, right, you did have really small ranges like that, did tend to mark some peaks, okay? So with that in mind, I do lean towards kind of the bet being on the short side at this point, but they're really the only evidence we've had for this so far has been NASDAQ futures. All right, there we go. So this is the shortest term chart we can go with. And you're going, simply October 3rd and October 9th lows, right? That was support here on the 22nd. And it was support on the 13th, which was yesterday. And we dropped through it today. And then it was resistance again here. That was in this morning. And it is where we closed at. So, essentially, if you're going down at all, it's like right here or not at all. At least in my opinion, that's the setup, right? You've also got the line off the highs from April and July, crossing right through these levels. We did hit the first target at 82.59, which was 2 legs up, right, from the August low. No, excuse me. Yes, it was from the August low here, here, here. So we have stalled at a definable level, if you will. I've shown some of the volumes reversals and stuff that we had on the downside. Actually had a 30-minute reversal on the upside today. But here we go. I will say, by the way, if we do come off at all, the level to look for or to know from support, I still think is probably 194, 195 in the Qs. This is a shift fork from the December low, just like the $1 yen, which is from the October low. And you can see the 75 and 25 lines here, right? Pretty important. That's where we came from. And we've stalled around the center line now, which was resistance before, by the way. So if you did pull back, you'd be looking at that level as potential support, maybe to make a big consolidation top or what have you, but nothing gets broken for real until you break this lower parallel. All right, so all you got to know is that we are at an important point right here in time. We have seen some of the other markets turn up pretty solidly, or risk markets, excuse me, if you want to call it that, such as TLT, right? Bonds have turned up. I mean, just a beauty of a turn here in the bonds and TLT. Big response. Kind of surprised that we haven't seen more downside in U.S. equities. We have seen pretty good downside in global equities. China's gotten hit hard over the last week or so. Go to commodities. We'll look at some gold, some silver. Hedge charts on these recently, I believe. All right. So, all right, here you go. So gold, we did turn up the last couple days, and it's not out of the question that we've actually made a low here. I just want to see a little bit more because you do have this better, more defined level at 1427. The reason why I say, or why I'm open to more of a tradable low in gold right now is that just based on using big, huge volume levels as pivots, okay? So remember, we had that huge volume drop here on the 7th, right? That was the most volume we'd had in since the presidential election, okay, in 2016. So the fact that we closed above that level today, to me, is a positive. For that level to provide support now, and you want to see that before. That's the evidence I want to see before I turn, kind of bullish gold here. Is that you want to see 1466.40 hold. All right. Otherwise, you're still risking, or gold's still risking a potential drop back towards the 20s, high 1420s. Okay, and that's a pretty big move from where we are right now. So no need to be a little more precise. Now, as a very long-term chart, this big, huge center line that you see that we're on is the entire center line from the channel that starts at the 70s low. So it is really important. I wouldn't really want to see us too much below that. Going back to the day now, zooming in. The reason I view this as important is essentially, it's not super precise, but when we had the run up in June in the summer, we stalled around it, right? And then we kind of launched off of it as well. So I do view it as a key spot to pay attention to. It's also this big high here from August 2013. So there's a lot there in the high 1420s, low 1430s. Silver, similar story. Haven't had, oops, hold on. Would really like to see us drop one more time. I think you can see that pretty solidly on, if you look at like a 4-hour chart, and it's just this trend line here. It's only 2 touches here, but it's confirmed with the resistance it showed here in July, and then actually went through, came back and found support, and then we went higher. So this is a key spot to pay attention to. One reason to think that we might have another little drop here is that the drop from here, right, from the 25th high, 1, 2, 3, get a 4, and then a 5. So that's silver, and that's another reason why you really need to see gold show support on 1466.40 before you get too excited about it, right? That level is going to be, that fib level, that 38.2 is pretty much in line with that low. So pay attention to 1722 in silver, 1718, something like that. And then eventually might get a big buying opportunity down here at 1640. Crude oil, kind of wondering if we're going into more of a contracting type of a range, like if this is some big triangle, and triangles oftentimes do have relationships between alternating legs of 618. So that's why I've got this measurement here. So we're just measuring 618 of this run from the low here on October 3rd or whatever that is. If you did, you could get maybe 58.66 and then turn back down. But generally speaking, keeping it simple here has worked pretty well. We've had this channel from the highs in the end of April, and we've had great touches on the 25 line was resistance, and remember we nailed support on the 75 line. So we're looking at the right stuff here, but this is awfully choppy, overlapping price action, just as all of this is. Just as all of this is. So to me, this could be some sort of a very large triangle. Too early to say if it's a bullish or bearish triangle, right? You're going to see more legs within it. So, maybe an A, B, C, D, E. Either way, you probably have a couple more gyrations within this range before you'd want to, think about a bigger breakout move, right? Copper took out the highs and just failed. So we're still looking at this as potentially constructive. However, you're going to need to see support back, no lower than like probably 258, okay, if copper is going to get a move on to the upside. All right, let's run some scans real quick and see what came up towards the end of the day, or after the day was over, excuse me. Well, I let those run. If there's any questions or anything, then let me know, because we'll be ending things relatively soon. I just went through everything that I had. Oh, I forgot this one. A market that I would pay attention to, which we haven't discussed in a long time, but is the Mexican peso. So here's a daily chart of the peso. This is a channel all the way back to the 08 lows. And I mean, the thing's just perfect, like nailed the top on Trump's inauguration, actually. And that was the election, and that was the inauguration. And that was a hell of a trade to the downside. But what's happening right here is this median line has been insane support for 4 years, okay? If this breaks, essentially what you have is a huge triangle here too. If this breaks, look out below, all right? And I don't know if it's going to break. I'm just saying, if we start to, really crack some of these lows, there might be a hell of an opportunity to be short dollar mex, which means long pesos, which means long Mexico, by the way. And this is Mexican ETF. So if you want to branch out from FX, maybe take a look here. Kind of would have liked to have gotten a little support a little lower, but whatever. It's a pretty decent setup. All right, back to the scans. Okay, so high in S&Ps, that was it today. Lows in Euro, Pound, and Aussie Kiwi. Not a surprise there. Let's see if we have any the Nikkei might be on a sell signal. So the S&P it's been up for 25, or it's closed above its low. It's closed 4 bars prior, 25 days in a row, which is something that hasn't happened too often. In fact, if you want to see what that looks like, check this out. So ran this test before, and the only times we've had anything like this, first time since 2014, when it happened 6 times, and then before that, 2011, 1991, 87, 86, 76, and 71, and that's it. So these are one-day returns. They're very small pullbacks that tend to happen after it, but it's just an interesting tidbit that we are that extended. Again, the last time we were this extended as far as this metric is concerned was all the way back in December of 2014. We actually continued to go. It went for, I think, 30, and then you had a big break. And that was actually the big break that That's when euro yen topped, I believe. If I'm correct, in December of 2014. I think I'm right on that. Let's take a look here. Yeah, it was. So that was when euro yen cracked. That was because that was December 9th or December 8th was the high, and then that's what happened, right? We went from 150 to 130 in like a month. So interesting to note. All right, so I don't think there's any questions. It does not seem like it. So I'm wrapping this bad boy up, and thank you for attending. Now I'll have this archived a little bit later tonight. Swing update will be out pretty soon. Okay. All right. Have a great rest of your week. Bye.